Hi everyone, my name is Carin Ly and I work at Bank of America. Today I hope you enjoy my talk about supply chain digitalization. Trade finance processes have traditionally been very manual and paper intensive. These processes invariably creates a copious amount of data that is often trapped in silos. The impetus for change is stronger now than ever. As businesses are looking at their supply chains, these are becoming way more complex and fragmented than previously. So they are turning to take advantage of technological advances in order to modernize and digitize these supply chains. The same businesses have also seen an increase of the cost to handling papers and being dependent on papers, as during the pandemic, their business continuity challenges may have been magnified due to lockdown measures and different measures like that. Across the industry, major players are forging collaboration and partnerships to redefine trade finance and to unlock benefits for their clients. Currently, majority of industry focus is placed on, and rightly so, trying to solve documentary trade, such as guarantees or letters of credit. There's been much positive development and achievements in this space already. However, with up to 85% of all trade done on an open account basis, there is evidently a lot of opportunity to modernize and streamline these paper-heavy and inefficient processes as well in cross-border trade. It may not be obvious or clear to these banks as to the extent of manual work required in trying to handle open account trade, because clients could do this in-house themselves without any bank involvement. But that doesn't take away that the pain still persists. So current cycle times in open account trade is quite long, partially due to the physical movements of documents, but also of discrepancy management between buyers and suppliers. Open account trade lends itself very nicely to transformation because of three key characteristics. Number one is, although there are a vast number of documents and different data elements involved, typically very few negotiable trade finance instruments or documents of title of underlying goods are actually required for the invoice approval process of open account trade. So this makes the usual challenges associated with documentary trade a bit less prominent. To be clear, these documents may be required for customs approval or other parts of the process, but usually not for invoice approvals. Number two is, most supply chains would have lots of data, if not all the data required for open account trade transactions, even though it may be trapped in silos. So the good news is one doesn't need to create new data standards or anything like that, but rather we could use APIs or some other existing technology to utilize this data. And thirdly, due to the nature of open account trade, there is a compounded issue with lack of transparency because of the sheer number of transactions involved and the large number of suppliers. So from a buyer's perspective, they may not always know when their purchase orders are accepted, unless, of course, they're using a tool like an e-invoicing system or something like that. And from suppliers' perspective, they may not know when or how much they're going to get paid after they're shipped their goods. So with the data aggregation and 24/7 platform, these issues could be overcome. So how do we move from disjointed and disparate trade finance platform and processes to a uniform, data-driven trade ecosystem? As part of a multi-year trade transformation journey, Bank of America had the opportunity to completely redesign our open account trade offering, and our focus has been on simplifying and digitalizing. By using the data that is already there in the system, we have managed to achieve straight-through processing rates of 96% for some of the early adopters already. One of the key fundamental principles we had in mind during the client discovery phase with the small number of anchor buyers is that the data silos common to today would be replaced by an integrated workflow. Because like mentioned earlier, the systems do not have to be compatible with each other, but rather we would use APIs to stitch it all together. As long as the data is exposed at the right time that is critical for processing, then you don't need to have interoperable systems. And in fact, there would still be a way for all this data to be exchanged seamlessly and automated across your information supply chain, your physical supply chain, and physical supply chain. At the moment, our solution covers these 4 counterparties highlighted on the slide above. However, should we wish to add further parties or counterparties, then the solution has been designed to expand modularly. And finally, by organizing the workflow this way, we believe that this creates a single source of truth where all counterparties have access to the same data, which increases transparency between them and ultimately the trust. And this also leads to lower risk of fraud or incompliance. So to further illustrate how it works, step number 1 is that the buyers would go into the platform and set up their matching rules. And then suppliers would be onboarded on a light touch supplier onboarding process. These matching rules are quite flexible, and they have tolerance levels and different features like that. So these matching rules are no longer stored on paper anymore, and suppliers are also no longer advised over letters anymore. Instead, everything is digital and online. Step number 2 is then that the buyers upload their purchase orders, which suppliers can accept. And once that's all gone through, either the supplier or their logistics provider can send in extracts of data from invoices, goods receipts, or other documents required. Should any of the data be stuck on physical paper, then our platform can extract and capture that for ingestion into the tool as well. And step number 4 is if all these parameters entered matches the requirements set up by the buyer, then the system will process that automatically for a payment on invoice maturity. Should they not match, then there will be a discrepancy that needs to be resolved between the buyer and the supplier. But now this is much easier because obviously they have access to each other over our platform. And finally, should a buyer want to, then they can use Bank of America to execute their payments automatically. So the overall cycle time end to end has been reduced from 1 to 2 weeks in the past to minutes. And most of the time, it can also be processed straight through. Some of the data exchanged in this process would be codified underlying procurement contract details, bank and account information, or registration details. So in order to transform and digitalize all of trade flows, there are certain building blocks that are helpful in this pursuit, like the panel before covered, things like supportive legal framework, wider industry collaboration, but also common and standardized rule books are very helpful. There's been a lot of positive developments already, and the rate of change is accelerating. At Bank of America, we chose to start transforming open account trade in order to build momentum and also drive adoption with clients in terms of digitalization. And in that, we have leveraged and used the client impetus. We are using API technology that's already there, and we're leveraging the data that's already in the ecosystem. Even by just doing this, we have seen benefits in taking millions of pieces of paper out of the process and thereby reducing the carbon footprint. From our clients' perspective, they have seen a much improved procure-to-pay cycle because invoices are approved much faster now. And there is a knock-on effect of this in that these invoices, in turn, can feed into payables programs much faster. So things like supply chain finance or dynamic discounting programs. As an end result, their overall supply chains are much more resilient and have access to liquidity. From a supplier's perspective, they have gone from not really knowing when or how to get paid to now having insight into the invoice approval process of the buyer and also seeing transparency and visibility over the status of these invoices. And last but not least, they also have control over the discrepancy management resolution with the buyer in order to progress that invoice to approved status. So we believe that by using data this way, this represents a general convergence of trade finance and cash management objectives. And it is very important to think about the overall procure-to-pay process holistically for clients. We hope you found this talk interesting and would love to connect with you to hear more about your feedback and reactions on how existing data can be leveraged to unlock further benefits for clients. Thank you. Okay, that's a QA. Is the onboarding of buyers, suppliers, and logistics providers a manual process? How long does it take to say onboard one large anchor buyer and a supply chain? Right, so there is a partial manual, partial digital onboarding process, I would say. The first step is obviously to onboard the buyers, and they would have to integrate with us. However, we're also extracting supplier information from them, so that once the supplier gets onboarded to the open account platform, there is already pre-populated and pre-filled in information that they kind of just need to verify. And the key thing in terms of that supplier onboarding process is for them to click to accept terms and conditions. So we have, through this manner, tried to minimize the time and the effort required to onboard thousands of suppliers for a given supply chain. On the final question there, how does Bank of America's OA solution compare with what competitors are offering in this space? I think we have had the fortunate opportunity to redesign this. So as much as possible, we're trying, obviously, to not do things manually and trying not to touch anything other than digital data. Hence, this is quite a light touch impact on our back-end offices. I mean, obviously, I can't speak for the competitors, but I believe some of them may not have been that fortunate because they may be dragging with legacy issues or setups. So there could still be, manual elements involved in trying to process up an account for their clients. So there's a question around whether Bank of America focuses on domestic intra-US trade or also cross-border international trade. So it's definitely the latter. We're present in a lot of countries worldwide, and we are having trade hubs everywhere in order to process this. For us, it's an international business. And additional complexities, it plays back to the previous panel's discussion topics. So like I mentioned, open account trade is quite a ring-fenced, nice flow to re-engineer. But if we want to tackle all of trade and documentary trade specifically, there we kind of also need to move with the legal frameworks in each country is being updated, the rule books being available, and us adopting to those, and also having industry collaboration, not just being in a single island, so to say. Okay, I think time is up, so I'll thank you for your time today.